in there. Well, now,
Okay, I just started the recording, so let's go ahead and get started. So thanks to everyone for joining today. I'm going to do my best to do as good of a job as Erin usually does. I know that we've got a lot of people who attend regularly, and I am filling in for her this week. So I've got big shoes to fill there when it comes to, making sure that you all have all the information you need to use Finley in the best way possible. So I am Jennifer Eversole. So I am the CEO at Rake Digital and one of the founders. Finley has been something that I've been working on basically my entire career, some version of Finley here or there. So we were able to finally put it into the application form a couple of years ago, and we're really excited to have it moving forward and growing. We appreciate everyone's support. And again, just a reminder, we love feedback. We love to get feature requests. If there's something that you want in there, feel free. Just send an email to support@Rake Digital, and we are more than happy to look at those to see how we can make it just continually get better. So with that, I think we're going to change gears a little bit today. Please feel free to chat, ask questions, raise your hand, unmute, if more interactive, the better. But I'm going to go through a presentation that I do often when I'm talking to customers or potential customers about Finley, about why to use it, what's important about it, and just really kind of the why behind it. So I would assume that many of the people on the call, and I recognize a lot of the names here, are people who, are in the system every day doing it. And it's really important to me that everyone understand how important it is. It's not just it's not just an accounting job. It's important for a lot of reasons, and I think that's often overlooked. And so I like to just kind of point that out to people. Wow, the work you're doing really, really, really matters. It's really important. I have seen a lot over the past 20, 25 years when it comes to this area. I've seen people go to prison. I've testified in federal cases for people going to prison um, because they took advantage of the situation with their client funds. I've seen people lose millions of dollars in valuation on a sale because they didn't know they had this problem. So it's just really important. I can't stress that enough. So what I'm going to talk about today is internal controls. And before you drop off the call, that sounds really boring, but before you drop off or tune out, just bear with me for just a minute. So internal controls is something that I've been talking about forever. We're really just in the business of trying to reduce risk all the way around. That's what we do. Our job, our collective job as people who are tracking these client funds is to help reduce risk in that area for an organization. But it's not just about that. So when you have this really sound process or framework of internal controls, and you have processes, you have activities, you have procedures, you have, escalations and everything that goes into an internal control framework, it really does make the organization better all the way around. And whether they're stated or not, that's something that you have these controls. They may not all be written down, they may not be in a nice neat framework, unless you have a stock report, and then they are in a nice neat framework. But you really have to look at what you're doing and why you're doing all of these things, and it really does just make the organization better. It makes it more solid. It also has a lot of surprising side effects. One thing that you don't often think of, and it sounds a little counterintuitive, is that internal controls can really drive employee engagement. We all want to love our job. I mean, we don't want to have to come to work and not love our job or not think that we're working in a successful organization. And really, when it comes to employee engagement, when you have a set of internal controls, you're really you necessarily have to receive communication about expectations, about integrity, about ethical values. You don't have any questions. You come in and you know what the expectations are, and you know what your job is and what you're supposed to be accomplishing, what you're supposed to be doing. That way, when you're making a decision, when you get to a point in your job where you're having to make a decision, you know exactly what framework you're making that decision in. And that just leads to higher employee engagement and just makes everybody happier. Of course, when you have good internal controls, you're streamlining processes. Everybody likes that. That gives overall cost savings. And then when it comes to customers too, so this bleeds over into the customer realm as well. So internal controls build customer loyalty. And that's because people know when you have good processes. Your customers can just tell. So in other words, you're not going back 3 years later and saying, "Oh, in Q2 of 2021, we made this tax payment twice. Did you get a refund from the IRS?" That doesn't drive loyalty for customers because that's something that they don't want to have to deal with that far in advance. So when you're always on top of things and you always kind of give that appearance to customers, in this case, probably no news is good news when it comes to the client funds, then you're able to build this loyalty in your customer base and people notice and people talk about it. And then finally, customer confidence. So again, back to our, we don't want to go back and have to draft something from Q1 of 2021. People, that makes people question, what are you doing with this data? And believe me, there are many, many, many service bureaus out there who are not on top of this, who don't have this on their radar, and that becomes a reality, and it really doesn't inspire confidence. So those are the reasons that we're talking about this. And I'm just going to go through and kind of give this presentation in terms of what risks are we guarding against. And these might be things that you might want to take to your leadership. If you have, maybe concerns or if you have questions about any of these, this might be a good, kind of touch point for you to look at if you, wanted to have that conversation with anyone in your organization. I think it's helpful. So I will go ahead and get started. Here we go. There we go. All right. I often talk about 4 tenets of reconciliation. So as I talk to people in the industry, which I do every single day, and I always mention first that everybody has a different definition of reconciliation. Some people think that bank reconciliation is what it is. That's all we need to do. And I think you all on the call here probably know that that is absolutely not correct. Bank reconciliation does not equal reconciliation. So, bank reconciliation is there to make sure that your records match the bank records. And that's really it. It doesn't cover everything. We have to go much further. So, just because you write it down doesn't mean that it was supposed to happen. And that's why we can't just stop with bank reconciliation. The second thing is close enough is not good enough. I know we often talk about penny cards, so I'm not necessarily talking about that, but we can't skip facets of the reconciliation. So, if we have something, I can't tell you how many times we've got a variance here of $127 and we see a transaction for $124 and we think, okay, that's close enough, that must be it. And I think most of the time, 99% of the time, we come back and realize that, oops, that wasn't the case. There's something bigger involved here. So being able to, kind of get those down to the penny, I think that's super important. Now, don't get me wrong. There are systems, for example, MasterTax, where rounding is a big issue. Between UKG and MasterTax, there's always rounding issues. So we just have to deal with those the best that we can. But in general, we like to get things down to the penny as close as possible. Next is you are not reconciled until you are 100% reconciled. So if you have a customer that terminates and you need to refund them money, so you want to go to their ledger and you want to find out how much money you're holding, figure out, are you paying those taxes out after quarter end, or do we need to refund those if they're going to another service? You can only be 100% confident that that money is right if you are 100% reconciled. So if you have a lot of subledger rec variances sitting out there that are unresearched or you don't know about, or you haven't looked at your subledger rec items, you can't really have confidence that you're right. You have to get it to the point. Now, when I say 100% reconciled, I don't mean that you have $0 discrepancy. It's payroll. We are always going to have variances. We're going to have ACH returns. We're going to have negative batch twos, SUI rate changes, all the things that happen that have to be corrected, all the things that necessitate this big client funds reconciliation program. When I say 100% reconciled, I mean you have identified every variance. So when that customer terminates, you go look at their ledger and you go look at your Kanban board or your subledger rec tab and see, do we have any variances here for this customer? And then we know that we have to account for those as we before we refund that money. And then finally, there is no substitute for daily reconciliation. So I know, the system Finley doesn't require you to do this every day, but I can again say in my years of experience that it is painful to not do it daily. So when I'm doing this daily, I know that I only have to look to yesterday to see what my new variance is. If I'm doing it weekly, then I've got a week's worth of data to to sort through. Monthly makes it more, and heaven forbid quarterly, that's just a nightmare having to go back through every single payroll, every single transaction, especially when you have customers that are in multi-states. We've got localities, all the things that you all know and deal with every single day. So that's why we talk about daily reconciliation. It really does save time in the long run. To be able to have that. And again, it leads back to that customer loyalty. I would rather, if I process my payroll today with my payroll provider and there was some discrepancy or issue, I would rather know about it tomorrow rather than any time in the future. Okay, so the first thing that we do is get started by identifying risks. So we all have common risks in our organization. So you all, every organization is unique, but you all share similar risks when it comes to client funds. So let's talk about what the risks are. And you've probably thought about many of these, some of them you may not have thought of. The first risk that we've identified is unauthorized bank transactions. So an unauthorized bank transactions has to do with bank errors. So that might be, banks have employees too, and believe it or not, the bank systems are not perfect. So, there's human error, there's system glitches in the bank's core systems, and there could even be fraudulent activities. I mean, that certainly has happened before, where a bad actor at a bank may have the ability, if the bank's internal controls aren't sound, to dip into the client funds or your funds, or however. So we need to be aware that banks are not infallible. Bank fraud. So again, I just mentioned that. So bad actors manipulate or misuse the banking system. So that's, not necessarily internal in the bank, but, we used to have to deal with, you know, kids in the basement who are trying to hack into something, or that's something we talk about with cybersecurity as well. Now we're talking about nation states, so it's a whole different ball game that we're talking about. And so you really do have to keep an eye on that and make sure that all of the transactions are valid, free from error, and certainly free from fraud. The second risk that we have is unexpected bank transactions. So these are not unauthorized, these are unexpected. So these are things that you did not necessarily initiate, but that you need to account for in your reconciliation. So we've got those ACH credit returns, ACH debit returns, we have to deal with those all the time. And then of course, bank errors. So again, banks aren't infallible. There are errors that happen, and it's in everyone's best interest to keep an eye out. I mean, think about checks that clear for the wrong amount. It happens all the time, and we want to be sure that those bank errors are corrected in a timely manner. Next, we have inaccurate client ledgers. So we're building the client ledgers in Finley. When you're importing your ACH file, your PTS file, or your reports, or whatever is the listing of your impounds and your payments, we're of course using that to build your client ledgers. So one really important thing, again, when that company terminates and you go to refund the money, whatever tax money you're holding for that particular customer, you have a risk of having an inaccurate client ledger, and then you're refunding the wrong amount of money. So examples of things that causing inaccurate client ledgers, opening and closing balance variances. So I'll talk about this a little bit more when we get to the risk mitigation section, but I have certainly seen, especially with smaller banks, where they might post a transaction to a prior day that you've already reconciled, and you have to be able to identify if that happened. Cleared transactions that were subsequently voided. That's not something that Finley allows you to do, but in another reconciliation system, I know there's several of the payroll softwares where they have the bank reconciliation functionality in there. And I know at least one of them that can certainly happen, and does happen often. So we have to be sure that doesn't, because then you've got an inaccurate ledger because you have a cleared transaction that's not reflected in the ledger. We also have duplicate ledger transactions. So posting the same transaction multiple times can overstate or understate the ledger balance. And then unrecorded ledger transactions. So again, same thing. If we don't have the correct ledger transactions posted when they are initiated, but before they clear, again, we can understate or overstate the true ledger balance. So those are all risks of, things that cause inaccurate client ledgers. Next, we have agency, bank, or ACH processor errors. So all of these things happen. I've seen them happen. I know back in the day it was more common than it is now, but boy, was it a bad day when you got that phone call from that first customer who didn't get their direct deposit, and you know that you've got 100 more to follow because either the bank didn't process the file, they processed it late, or maybe they didn't receive it. So I'm sure all of you have a handshake or some sort of system with your bank to make sure that when you send a file, they receive the file and it's the correct amount. So that would be the confirmation totals that you typically get when you submit your ACH file. But if you don't have those in place or your bank doesn't employ those methods, that can be a real nightmare. So, if these errors might occur because the bank didn't receive the file. It might be that they didn't process the file. I could tell you stories all day long. When I was with MPay many years ago, we switched to a new bank and did not realize that the processor behind the bank was a national bank. So the bank that we used wasn't actually processing the ACH. So our bank actually outsourced that to like a Wells Fargo or Bank of America. And our bank had an exposure limit. And one day we sent ACH files, and our ACH files ate up the entire exposure limit for this bank. And so they only processed the debits and didn't process the credits that day. So that was a really bad day too, because nobody got their direct deposits, but everybody got impounded. So things like that do happen. Of course, that was many, many years ago, but they do happen. And then of course, banks processing files late. So whether you send it late or, something may have happened and sending the files late. So next is incorrect amount of funds held. So all these things we were talking about, human error, files didn't go, but there's also all of these things that lead to incorrect amounts of funds being held. So your impound was incorrect. It's a batch 2 negative. It's where you're not going to refund the money. All the payroll systems work differently, but you're not going to refund the money because you're going to reduce a future tax deposit. But I'll just kind of flip through these really quickly. So we've got incorrect impounds, missing impounds. So you didn't actually send the impound in the ACH file. SUI rate changes, stale checks, incorrect payments. So that would be tax payments made in the wrong amount, missed tax payments, or tax payments not paid. So, it can go any of those ways, or duplicate tax payments. We also talk about ACH returns, amendments and adjustments. Those are tax adjustments, unreturned terminated client funds, and mid-quarter impounds. So that would be new clients starting mid-quarter, and you don't get all the FIDO SUI from earlier in the quarter. So there's a lot of things that can go wrong, and I'm sure you all see on a daily basis what does. Hopefully you're able to improve your internal processes by identifying what happens. What happens more often, and how can we keep that from happening? So now that we understand risks, I want to talk for a minute about how we are mitigating them. So I'm going to kind of flip back and forth in Finlee and kind of show you where these controls are, or where these risks are mitigated throughout the system. So again, please feel free to stop. I'll pause for a second. Brett, do we have any questions? I'm not sure how to work this webinar. Sorry, everyone.
No, you're fine. No, nothing yet.
Okay, thanks. Okay, let's talk about the risk mitigation and what you're doing. So we put control activities in place. That's, one of the main things that we do is to mitigate risk, is put these control activities in place. So these are your internal controls, and I want to just kind of talk through those and what we do. So timeliness, that's one thing. So this, again, talk about how your reconciliation should be done daily. It should be as important in your organization as sending the ACH file. You're not going to leave at the end of the day, or whoever's in charge of that is not going to leave at the end of the day without sending an ACH file. That would be really bad. I feel like the same is true here. It's that important to make sure it's done. So again, what you all do is so important. I can't overstate that. The second thing is accuracy. So we want to ensure that the reconciliation system does not allow the user to modify an opening bank balance. And then we want to verify that the closing bank balance matches the bank information. So these are two things that allow us to ensure that the bank reconciliation itself is accurate. So I'll kind of flip over here to Finlee, and I'm on the reconciliation screen, and I've pulled up my current reconciliation. I've got an old date in here, but my bank closing balance, as you all know, it starts with 0. You have to type that in. So the reason for that is you need to be looking at the bank website or report or your BAI file or whatever it is to show you what that ending balance is. Now you can see right now I've got an out of balance and there's no option for me to reconcile. So that's what I mean by we need to be sure that the system does not allow the user to modify the opening bank balance, because that can cause a problem. And then we need to do this, and now I'm able to reconcile. So now I can click reconcile and I'm done with that. If the system does allow the opening bank balance to be, or sorry, the opening bank balance to be modified, then we need to have a mechanism to show if that was incorrect, and that we'll get to in just a moment. Additionally, we need to make sure that the net of the cleared deposits and payments equal the difference between the opening and closing bank balance. So that's a mouthful, but just to say what we just looked at, where again, this out of balance, this calculation is bank closing minus bank opening, and that must equal cleared deposits and cleared payments. So right now we have an out of balance because obviously we've got 0, 0, and the cleared deposits and cleared payments are there. And of course, the only reason this is an editable field is because this is my first reconciliation in this demo. You all know when you come back, you don't modify that field. So now we've got those completed just by the system features where we don't allow these things to go wrong. All right, so the next thing I want to talk about is the ledger reconciliation. I think this is probably the second most overlooked reconciliation in anybody's client funds reconciliation program. So every day we need to reconcile the adjusted bank balance back to the sum of the individual client ledgers. And you all probably don't even think much about this because normally, of course, when we're just coming here, we're just clicking the find variances button, and it's actually performing that reconciliation for you. It is really important. It's a good screen for auditors as well. So for those of you who have SOC reports, let me talk about SOC reports for just a minute. A lot of service bureaus have them, or a lot of HCM providers do have SOC reports. You usually have a SOC 1 Type 1 or a SOC 1 Type 2. And in that, you're going to state your internal controls, and then your auditor is going to come back. And if it's a Type 1, they're going to render an opinion on whether those controls are sufficient. If it's a Type 2, they're going to render an opinion on whether the controls are sufficient and operating effectively. So most of you probably have a SOC 2 Type 2. And in that, you want to have some type of internal controls around your client funds reconciliation. A SOC 2 report is a auditor to auditor communication. So that means that when your customers are in the middle of a financial audit and their auditor comes to them and says, okay, give me your controls around payroll, they can provide your company's SOC report, and that kind of checks that box for them. So you have a SOC 1 Type 2 when the work you do for your customer can affect their financial statements. And obviously payroll is a big part of that. So that's the whole purpose for the SOC report. So when it comes to client fund reconciliation, so I'll back up a second. There's two different, most organizations have kind of two different sets of internal controls. You have your internal controls that you live by, and you have your SOC report internal controls. Your internal controls that you live by are like very detailed. Everything you do is in them. So again, we do the bank reconciliation every day. We manage our exceptions every day. We look at our subledger rec items every day. We do our ledger reconciliation. So those are the things that you should have that are controls that are internal. I don't typically recommend that all those controls go onto a SOC report because if something happens and you miss a day, you can get, potentially a qualified opinion on your SOC report. It has to be a pretty big deficiency in order to get a qualified opinion, but at the very least, you can get exceptions, and you really don't want any auditor exceptions on your SOC report. So one thing that I recommend is that that HCM providers use as their SOC report control something along the lines of, we complete a ledger reconciliation of all of our client funds accounts every single day. And this screen is designed to be auditor friendly. So every time I click this button, it is of course giving me a new list in my drop down. So I can go back to a prior reconciliation and show that, here's my date timestamp. If you have a control that says it's reviewed, you can put the date timestamp there, and then you can export this. The PDF is actually a new functionality, I think, from the last release, and that was at the request of an auditor. They didn't want the download to be in a highly editable CSV. So now we can download all the information in PDF. So basically, when it comes to this, your auditor just comes to you and says, give me your reconciliations for these 10 days, and you can just go find them, download the PDFs, and you can show that. So when we click into this, we see a little bit more details. These are my ledgers down the side. So I can have, of course, billing, direct deposit, trust, and tax. And when I click into it, this gives me all of my bank accounts associated with the ledger, the most recent statement date that was reconciled. So again, somebody can look at this, compare this back to the bank balance, and ensure that these are the same. These are my uncleared transactions. So these are just transactions that are out there. That doesn't mean there's anything wrong with them. They just haven't cleared yet. And that gives me an adjusted bank balance. So I describe this number as if everybody quits today and goes home and everything settles out and you never process another payroll or send another tax payment again, this is how much money is going to be left in the bank. And you want to make sure that matches the sum of your individual client ledgers. If not, that could mean those risks that we talked about back here of, get back to them, of the cleared transaction subsequently voided, that is going to, that would create an exception on the ledger rec. Those bank processing or posting something to a prior day will cause a ledger rec variance. And also if you change an opening bank balance, not that you can in Finlee unless it's the first day, but yeah, if you did, that would also cause a ledger reconciliation variance. So this is really important. It's really quick. The system is designed not to let this happen very often. I know they sneak in there every once in a while, and but typically this is, they just kind of go and that's how they work. So let me come back over here, get back to the right slide. All right, so that's the ledger reconciliation. Again, not something that you have to deal with very often, but it's important that it's done every day. All right, the next control activity are the important subledger reconciliations, and I know that's where we have the most questions. So I have the 3 subledger reconciliation categories that we look for every day. So of course, we look for liability variances. So that's on the tax side. And we use exception reporting, of course, and we identify ledgers where the funds held don't equal the pending tax liabilities. So that's why we import that, whatever your pending liabilities file is. So for UKG Master Tax, it's the liability analysis. For any Millennium users, we usually use a SQL to give us that outstanding information. But that's what we're comparing your ledgers to make sure that you're holding the right amount of money. So if you have I'm sure I have some in here. So if you have a SUI rate change, for example, so this means that your liabilities are 2289. So perhaps there was a SUI rate change and the rate went up a little bit. You're only holding 2184.44 total. So that tells me that I am short this 10508. So that could be an example of something that could be driving this. And these, of course, only occur on the tax ledger. So that's one thing that we're looking for. The other thing that we're looking for is aged uncleared. So these are individual transactions as opposed to the liability variance and the negative liabilities, which are all aggregates of transactions. So an aged uncleared tells me that this is an ACH transaction that should have cleared but hasn't. So this transaction, this is an ACH, and it's for a positive 8714. I know that because I'm short 8714, which means I did not get the deposit I was expecting. So this transaction date here is 3/1, and we just reconciled 3/15. So you do have the ability to set the number of days until you see these. So your tenant administrator can go into your organization, and I'm sorry, I'm on a view that's different from what you see, but I will pull one of these up here and let's see, pull up my Finlee fundamentals. Here's aged uncleared number of days. So we have 0 here. Auto match number of days is something different, but this 0 means I want to see my aged uncleared transaction as soon as it becomes available. So that's what we're looking at on aged uncleared transactions. And then finally, we have our negative liabilities. So negative liabilities are where you've paid out more than you've taken in for any particular ledger. So it just means you have a negative cash balance. We just call it negative liabilities because if you think of things, every customer as a balance sheet or every customer ledger as a balance sheet, you have negative cash and negative liabilities, which is why it's called that here. So one note about negative liabilities, is something that's probably not widely known, but negative liabilities can happen on a tax ledger, but they don't often happen on the tax ledger. The reason is because if you have a liability variance, or let me back up. If you have negative money on your tax and you have negative liabilities, negative tax liabilities. So let's say that Millennium is one system where your deposits can exceed your liabilities. And so it looks like you should have negative money. So you have negative money and the tax part of the payroll manager in Millennium shows that you're supposed to have negative money. Well, there's no liability variance there. They match. But that situation is called because if there's a negative amount, so while the negative liability in your payroll system matches the negative liability or the negative cash amount in Finlee, again, no liability variance, but that will get caught because you have a negative liability. So we're looking for that as well. So we first look for the liability variance and then we look to the negative liability. So if there's both a negative liability and a liability variance, we simply display the liability variance because that will give you all the information. That keeps your variances from doubling, from being in there twice. So the same dollars being double counted on your dashboard. So those are the subledger reconciliation items that we look for there. And then, of course, none of this does any good if you're not tracking it. So I know there's been evolutions over the years. When I used to consult with our Millennium customer base or service bureaus, we had all kinds of iterations. So either a spreadsheet that got passed around from day to day, and that was even before the days of like OneDrive where you're sharing spreadsheets, you're literally emailing them back and forth. And that was a little bit painful. I know we had some customers who used things like emails where you just have an email that kind of you send every day to the appropriate departments and it lists the descriptions of all of the reconciling items. And so it kept a list of everything that was there. And that was kind of error prone as well. And, some things can get dropped off. Things aren't properly verified and vetted. If you have it just on your checklist and you just check it off, but it's not actually fixed, back in the day, it could just disappear. And then, you've kind of done all this work for nothing. So of course, that's why we put in the Kanban board. So that's here for you to do this. My favorite thing about the Kanban board is that it is pesky and won't allow you to close things. So if I just take this aged uncleared and stick it over here in the completed column, but I don't do anything about it, the next time I click the refresh or the find variances button, it's going to just bring it back up here again. And so it doesn't let you do that. It doesn't let you close something until it's fixed, or it will let you close it, but it's certainly going to bring it back up to you again. And then, of course, the pending resolve does just the opposite, where if I resolve this, stick it in my pending complete column, and the system validates that, yes, in fact, it is closed, it will show up here on the pending resolve tab. So those are all things and examples of, kind of where we go. So that gives you kind of a little bit of insight into where Finlee came from. I've been talking about these internal controls for many, many, many years. And so when we created the system, we looked to this exact set of internal controls so that we could make sure that everything in the system is accounted for. Everything in your program is accounted for so that you can have, kind of complete confidence that everything that you're doing is worth the time and is preventing, potential disasters from happening. So I think that was the end of this. So we'll make sure that, I think, Brett, can we share out this presentation somehow or send out a list? I'm happy. It's just a URL. Okay. I'll be sure that everybody gets the URL, for what it's worth in case you wanted to look through it or if there's anything else. Of course, I'm always available if you have any questions, if you wanted to talk about internal controls more, I'm certainly available to do that. If your company is working on a SOC report or has questions about a SOC report, we do a lot of work with HCM providers who are either embarking on their first one and just need help on the controls, not just in this area, but we're experts in all of the areas, so we can help with those as well. So if anybody has any questions, but I'll pause for a minute and see, Brett, do we have anything that we need to discuss?
Nothing as of right now, no.
Okay, your quiet group, but that was all I had for you today. Thanks for joining me. I think Aaron will be back on the next webinar. If you have any topics that you want us to discuss, I know we're always trying to make these more valuable. We love that we've been doing these for a year and still have great attendance at them, so that's totally awesome. We've kicked around some more payroll application specific webinars. If there's something like that that you want, just please feel free to reach out and let us know, and we're here for you. So thanks everyone, have a good afternoon.